Let's go back to corporate planning and just wrapping up 2016.
Okay. The main thing I wanted to do here was sort of give some suggestions to think about as the year end approaches, ways that maybe you could improve the financial position of the company or even the business and the future of it. The first thing that maybe you could do at year end is, possibly call some of your customers and see if they want to make a large order, because you have to remember that on their side, it's a tax deduction. Maybe they want to buy a huge piece of equipment and take advantage of some of the stuff that Mark suggested. And also, as far as the year-end expenses go, the same kind of thing. Maybe you're expecting to buy a certain thing, but looking back at your budget, it didn't end up that way. So maybe you need to go ahead and do it. Call your vendors, see if you can get price concessions, or call other vendors, see if you can get their competitors to fight it out over you. And maybe you can, or there's a risk that your current vendor may run out of the thing that you need. Maybe you need some backup vendors just in case. So those are some of the things that you can look at as the year end approaches. And then from a rewards standpoint, this is the time to look at the bonuses at the year end, and also the contributions to the 401k plans. Review the compensation packages. Are you really incentivizing the people, incentivizing your employees the way that you wanted to? Are they doing the things that you were attempting to accomplish? Also, these days, people are more and more working from home. Is that something that your employees are wanting to do? It could save you a lot of office expenses, or wherever you have your place of business. You can alleviate all of that cost and just have them work from home, and maybe that would be a good productivity boost and cost reduction. And so you can look at studies of that. Also, as far as the year-end closing goes, you should probably have a checklist that lists out, these are all the things that I'm going to do to my accounting records to make sure that they're accurate. You've got to do an inventory count to make sure all of the inventory that you think is there is actually there. A lot of times it'll walk off. And do some variance analysis. See, is this a reasonable amount for my inventory to be missing? And look at the AR reserve. You can go down and look at all the customers that you have AR outstanding for. Maybe you need to call them and see what's the deal. Why have you not paid in 90 days? This is a big balance. Maybe you need to cut them off. And also collections. Maybe you can send a lot of your AR balances to collections and get a big influx of cash near year end that you weren't able to collect anyway. And as far as the financials go, you can check the new accounting pronouncements, make sure that things that you're recording things the way that they require. Make sure that all of your that you're able to reconcile all of your accounts, especially in our whenever we're preparing financial statements or auditing them. I mean, that's the first thing we're going to look at is there some kind of support, and does it agree to the trial balance? And accrue your expenses. Look at what you've actually expended this year, not necessarily from a cash basis, but what you are going to actually owe eventually. Do a fixed asset count. I think that's something that's unusual for, especially from a financial perspective account or financial statement perspective. Go out and see if that forklift is still there. Is this property burnt down? And also look at impairments. If you bought a company a while back, you'll maybe have some goodwill that you need to see. Is this company still profitable? Is it worth what we paid for it back then? And so then, as far as so next slide is audit readiness. So as far as audits go, we want them to go, whenever we're performing them, we want them to go as smoothly as our clients want them to go. And it's hard because there are a lot of moving pieces. But the first step, I think, for our clients is to understand the audit process. We're going to plan first, and then we're going to do the testing, and then we're going to issue reports regarding our findings. And we like to discuss with our clients the expectations, develop a timeline, hold us to it, hold us accountable. And when we request things, we like to keep up with the items that we've received or sent. That way we're both on the same page. And so I think communication with us is the key, and especially in the planning process, we really want to understand the business and the different accounts, because that makes things more efficient. We can decide we can decide how to test a particular item, and if you see that we're doing it inefficiently or there's a better way to do it, let us know, because we definitely want to do it better and more efficient as well. And so when the testing comes about, have a dedicated person that's going to be the point of contact, or the one that's going to help us and is knowledgeable about the business, and have support accessible, have invoices that you could pull if we were to ask for them. And also at the end of it, we'll issue reports, and we make mistakes too. So our reports could not be the way that you expected, and let us know, review them really well. So and also a lot of accounting changes this year that could affect you. The first two, the leases and the revenue recognition, really don't come about until about 2018, and they've been negotiating them for a while, but you can early adopt them. The leases will possibly put a lot of leases that you've been just expensing every year to actually put them on your balance sheet, and you'll just offset it with an asset as if you're doing a capital lease. But in revenue recognition, it's kind of similar to the way it's been so far. It's just now the accounting rules are trying to integrate the U.S. standards with the international standards, and so there's kind of some changes in semantics and such. The inventory is just a change in semantics. It goes from doing the lower of cost to market to lower than to cost of net realizable value. Kind of a similar concept, but just a change in semantics. And then the 401ks are becoming a hot topic, especially in the auditing side, because they're really cracking down on it, and rightfully so, because it's a huge fiduciary duty that you have to your employees. Should your employees really pay those expenses and costs? Is that too high? Maybe I need to look at other providers or plans that are more conducive to what I wanted for my employees' financial health. And so then corporate planning goals. Towards the end of the year, you can really look at what's happened so far this year. What were you expecting for the company? What can I do now to change the trajectory or change the next couple years? And you can do that through forecasting or budget analytics. Go down your trial balance on the income statement side and see, hey, why did we pay this much in rent? I thought we were going to pay this. Why are our employee costs so much? And also from the revenue side, look at what's driving it. Is it your product that's bad? Or is your sales team not working hard? Are you not compensating them in a way or incentivizing them to where they want to make more sales for you? So you can consider all those things, and then profits. Look at your costs and make sure that it's conducive of a way that you wanted your company to be financially positioned. And marketing and advertising is becoming more and more digital. Do you have sort of an antiquated way of marketing your company? And different companies are different ways, but there are several firms out there that will help you to build your website and to have your Facebook page, help you track what type of person is it that buys your product. So what do they click on before they get to your website, and then what do they actually buy when they do it? And so you can, maybe call one of them up and see, what are your options. Technology and innovation. Is your product the way, or are you becoming the business of a typewriter? Do you need to maybe diversify into other things, or make your product more in line with what people are demanding today? And compare that to your competitors, to benchmarks, to the industry. What are they doing that works that you could maybe copy or improve? And so those are all kind of things you can do to possibly improve the trajectory of your business. And also from a risk management standpoint, Curtis has got the insurance front, but you can consider, are there risks that I don't need to insure? Maybe that risk is mitigated elsewhere. Maybe I can combine a lot of risks into one policy and make it cheaper, lower premium. Just kind of look at everything that you're trying to mitigate the risk of. And business interruptions are a big deal. You don't want to be paying people for doing nothing. And cybersecurity also these days is a hot topic. I guess it's sort of like locking your home. If someone really wants in, they're going to get in, but there are a lot of ways to mitigate that risk, and a lot of people who are good at it. And so review credit terms with your customers. Does this guy have $50,000 on your AR, and he's maxed out in your credit, the amount of credit he can get? Maybe you need to cut him off. And also supervision of employees and locations. Are they really, you'll do performance reviews and such. Are they really doing the things that you want them to do? Are you incentivizing them? What is the market, salary? Maybe you're getting a lower end of employee, paying them less and such, but just kind of look at those factors. Look at your location, your different locations. Maybe there's one that's out in the desert, and you haven't been there in forever. You don't know what's going on there. Fly down there, see if Bubba's still coming to work. And so, also your new entities and locations and services. Are you integrating them the way that you expected to? Maybe that business that you bought this year turned out to be a bad idea. Maybe it doesn't mesh well with your employees. The culture of the other company doesn't mesh with yours, and maybe you need to consider changing things up there. Concentrations. Maybe you have one vendor who supplies this particular product, and that gives them a lot of power to charge you more than maybe the market rate. Maybe you can figure out different vendors who could supply the same thing. Customers, the same thing. If your customer goes bankrupt, what happens to your company? And so internal controls is a good time to look at the processes you have in place. Maybe Susie doesn't do that particular task anymore, and there's a risk that someone could steal money now. Just kind of look at the way your accounting processes go, and make sure they're all still tight. And employee performance we discussed briefly, but yeah, make sure they're doing what you want. Your managers are managing the way that you wanted them to. And okay, so lender discussion. This is an opportunity to modify your existing financing if you'd like to do that. Change up interest rates, change up the covenants. Call your lender, see what his thoughts are. And this can go in line with your forecast and budgeting as well. If next year you need to buy 10 vehicles, go ahead and start talking with your lender now. The most expensive capital that you can get is the capital that you really need. And so if you go ahead and it's a very lengthy process for them to go through the underwriting. So go ahead and start now and planning for that, those different purchases that you need to make. And yeah, so that kind of wraps up with an overall look at your company as a whole.
Yeah, and I think that what we see is a lot of our clients just struggle with change. The change is coming so rapidly, and there's so many things to consider until that's the reason we keep encouraging clients, take this list, highlight some things you need to look at, but we just keep seeing clients struggling with, is the market moving away from them? Are there people incentivized? I sat in a board meeting this week where the company can't even agree now on what size projects, and what it is people go, and we've all heard this, well, we've always done it this way, and we've always followed these kinds of rules. Well, those rules aren't applicable anymore. It's kind of like the typewriter. It's just not there, and they're struggling with getting people to make those changes. The other thing we see with clients is trying to figure out, they don't have their numbers current enough, and so they can't sit down and take a look at tax, financial reporting, and bank covenants, all three simultaneously. And because one of the things we're really sensitive to with a lot of our middle market clients is if we're over here and marking them and doing tax planning, what impact does that have on the financials and the ultimate covenants? Are we going to bust a covenant because of that? Or we've had clients that because they weren't thinking ahead about what equipment they needed, and they needed those 10 new vehicles, next thing we knew, they'd blown a covenant when all of a sudden they went out and borrowed from some other entity that nobody knew about, and next thing you know, the covenants had a bust. I mean, there are all kinds of changes that people have got to watch. One other thing we mentioned back there is the cybersecurity. I would suggest everybody look at some form of a policy for that in terms of just what happens if. I mean, you've seen some of the slides that we put up over the last year or so about the number of potential hacks and what's going on and how your systems are being bombarded. If that ever happens and your client data, Social Security numbers, FIN numbers, all that stuff gets out in the market somewhere, or even just the ransomware. We had a major insurance company client this year that got hit with ransomware. They locked it down, they paid those people twice, and they still never got their data back. And they ended up finally just having to rebuild everything and found themselves almost 6 to 9 months behind. They didn't have appropriate backups in their system. It all just came tumbling down. And you don't think about this. You think, okay, banks, insurance companies, all these people, have it together, and we all just kind of take for granted what's going on when that's not the case. And that's the reason some of this stuff sometimes kind of seems elementary, but when you start thinking about the what ifs, that's where we tell clients that's the stuff that we hope doesn't jump up and grab you.
Just a quick question, Greg, on that, because I was at a conference by Chase for Business 2016. They had a work session on cybersecurity, but they talked about you could buy insurance now for that. Could you elaborate on that? If you know
we actually bought it ourselves this year, and and our head of IT brought it to us and said, look, and it covers things like the cost of dealing with the public relations issues, the cost of if clients start suing you or people start suing you over their data and information getting out in the market. It helps cover some of the restoration, just like business interruption coverage if you've got to have help in those areas. There's a whole litany of things down through there that you don't think about. It's almost like a waterfall. Once it starts running, it's kind of like water in your house. It just starts spreading, and you don't know how far the damage, and you can't control it. And it's having someone to stand alongside you and a team of people that the insurance company basically brings to the table. I think it's all that kind of important stuff. I mean, it still has deductibles, coverage for different areas, but it begins to get you thinking, and it's actually not that expensive. I was amazed. It was just I'm going to call it, Ryan, correct me, a few $1,000s. I mean, it wasn't. I'm going to say it was like $2,500 to $3,000 for millions of dollars of coverage. And so it's not something that's a huge number, but let me tell you, if you start having to fund that out of your own pocket, and you're behind, you're trying to keep your business running, it's things like that cause companies to get set back decades.
A small business in that market, small to mid-sized business got hacked, would be out of business within 6 months.
I agree.
It's devastating.
Yeah. And I think it's the same thing with people not planning and not sitting down and looking. And, that's why we keep saying, remember what the dates are, because we're going to have to do the planning in the fourth quarter with you with all these different areas. And then we've got to turn around and by those due dates Mark was showing you, be able to tell you what your estimated payment needs to be. And if you're not paying that on time, then you got penalties, interest. The problem starts escalating on you quickly. And profits are hard to get. I mean, I talk to clients everywhere, and it's like this year, it's been up and down and things moving around. I mean, with the oil and gas market, that ripple has finally worked its way through. There's just a variety of different things going on. I think the election has created some angst on people's part. Things have seemed to have slowed down. I move around between a lot of different board meetings, so I get to see and hear from a lot of companies. And a lot of people are just struggling to get a black bottom line. I mean, they're just excited if they end up with a few $100,000 of profit where that number used to be in the millions. And it's just also finding people. We constantly hear in this Dallas market, finding people, planning ahead for who you need, the recruiting fees that it costs to buy those people. It's going to be 25 or 30% of base salary. It's not going to get any better. We were talking about how people work, figuring out what you do with, when it's an hour to this building from Frisco to here, a lot of days is an hour, hour and a half drive. What do you do with your people? How are you going to work with that? How does that fit in your budgeting and all the different things with technology and systems? That's the kind of stuff you got to be thinking about. And I would suggest, and we are going to do this ourselves, in early December, we're going to have pulled some of this stuff and sit down and really take our strategic plan and figure out what is it we need to be doing? What are the things we can do to make a better work-life balance, to keep our people? And how do we make that work better? How do we better service people? How do we plan? We have the same problems all of you have in a different kind of industry. And so I can't encourage people enough to look at that.